Okay, see the question here from your textbook, it is given. First of all, let me read this question and then I will explain how we are going to compute the break-even point in terms of unit by mathematical equation. So this is first of all, I will let you know from how shall we calculate from the mathematical equation. Then I will let you know from the unitary method also. Then we will derive one formula. So just take a look here. This is what exactly is the mathematical equation. It is very simple. Okay, you don't have to bother much about this. This is letting you know the sales is equal to variable cost plus fixed cost, because this is the element of the cost. Okay, and net income. And how is this coming from? You know it, that the profit or gain is equal to your selling price minus the minus cost price. Okay, so it has been derived from here. Okay, so profit plus your CP, and CP is a component, variable cost and the fixed cost, right? So this will be like this: the sales is equal to profit plus CP. That means sales is equal to variable cost plus fixed cost plus net income. Now see the question here. The first of all, see the little simple question, then I'll come to the some complex questions from this. Selling price is as mentioned here, $500. Units variable cost $300, and the total fixed cost is showing here 200,000. Okay, so just put it in the equation like this. 500 is equal to 300 plus 200,000, and net income is not given, so that is what you will put it as a 0, because you are going to compute the unit wise. So 500 minus 300, $200 dollar. Q is equal to 200,000, so Q is equal to 1000 units. So this is the traditional method of the bookish method which is given in the textbook. Now what I am going to do, I will explain it from the unitary method and let you know the concept of the contribution also. Okay, I already described, but see once again. So just I'm deleting this point and explaining you from the contribution point of view. Okay, sales as usual given here. The same question I am solving but in a different way. Sales is this, variable cost is given here as a $300, and the TFC, yani, the total fixed cost is 200,000. Okay, first of all calculate the, I'm not discussing about the mathematical equation right now. Mathematical equation I have already elaborated. Okay, first of all find the value of the contribution. So just write here contribution is equal to, contribution is a part of the profit, okay, which is excluded from your fixed cost, okay, from the one unit sale. And how much the one unit after selling one unit in the market, what is the variable cost? That means your direct material, direct labor and some overheads. So sales minus variable cost. Okay, per unit. Okay, remember per unit. Contribution is always calculated per unit. Okay, sales is how much given here, 500, and this 300, so it is coming here dollar 200. Okay, so you can use now the contribution, and from this unitary method I will explain you one of the formulas which is used here to calculate for the break-even points in units. So you can write here dollar 200 recovered, contribution recovered, contribution, okay, recovered is equal to 1 unit. Is equal to 1 unit means from the 1 unit. So $1 contribution can be recovered from selling of 1 upon 200 units. Now we have to include this portion, because to calculate the exact break-even point in terms of unit, we need to know the recovery of the fixed cost also. Okay, so we will write here dollar 200,000 contribution recovery will be 1 upon 200 into 200,000. Okay, so this will tell you the 1000 units. So what is exactly is the 1000 unit? 1000 unit is your break even point in units. Okay, I'm just marking here again and emphasizing this is in terms of unit. So the answer will be 1000 units. Okay, now just a second, we will quickly take a look the graph, how the graphical representation will be done here. Okay, so this is the x-axis, this is y-axis, this is the starting point 0, zero quantity produced, so zero cost. Okay, cost and revenue will be the vertical side, and this will be only the quantity. Fixed cost, as I said, would remain same irrespective of your production. If you have no production, still the fixed cost would remain there. If there is a production of 10 units, still the cost would remain same, because once you are acquiring land or fixture or machinery, so it is a one-time cost. So the fixed cost would remain same irrespective of any production. Understand? So this is here, in that case it is showing here 200,000. Okay, this is a sales line. Sales line will always be taken from the this point. Okay, zero quantity sold, so there is no revenue generation. As soon as the quantity will keep on increasing, okay, the sales will be increasing. Okay, so that is there. From this point is very important, because it is a point of your total cost. So total cost is equal to what? Your total fixed cost plus variable cost. If you are not producing any product, okay, so still there will be some cost. That is what known as the total cost. So the total cost will be moving upward like this. Okay, and this is a point which I have calculated is known as a break even point in terms of unit, where the company is neither bearing any profit nor any losses. Okay, so that is the concept of the break even point. Now quickly just see here the break even point in terms of unit. Come to this point. Okay, come to this point, 200,000. What is this 200,000? It is a fixed cost. So you will write here total fixed cost. And what is this point? Denominator. This is your uh, contribution. Okay, so total fixed cost divided by your contribution. Okay, so that will be another formula to compute the break even point. Okay, just writing in the proper manner, TFC divided by contribution. Okay, so this will enable you to understand the concept of the fixed cost.